Hi friends, hope you are doing well. I am Dr. Ganguly. Welcome to my channel. So today I am going to talk about some finance basics for students who are coming to the US or for anybody who is immigrating to the US, be they on H-1B visa, L-1 visa, or people who have obtained a green card or US citizenship and have come here. Now this video will also be useful to you if you are starting out in the US, if you are a young person and you need to begin the financial journey and you do not know much about how to start this process. So again, I'm going to make comments in this video based on my personal experience, based on some research I have done, and based on the experience of some people I know. I'm not a financial professional, so take my words with a grain of salt, and if you are interested in professional briefing, then please consult somebody who is a financial expert. Now with that caveat, let's begin. So the first thing you have to do is to get something going on with the banking system, and essentially if you come to a university, it's very likely that there is going to be a bank at the local student union, and this bank is going to give you a checking account specifically designed for students. So one of the things about such a checking account is that there is a no minimum deposit requirement in most cases. So look for that, because as a student you don't have much money and you don't want to commit to a minimum requirement. Now if you are somebody who has a job, then you can look for some of the banks which are out there, which are some of the major banks. For example, you can look at Chase Bank and so on. Now most of the banks will have something where they will give you some benefits if you set up direct deposit of your paychecks with them, so keep that in mind. Now going back to the university setting, most universities have a credit union which is linked to them, and this is also possible in the case of many companies and institutions where you work. So do some research about a credit union linked to the university. Certainly if you are at a state university, there's going to be a credit union nearby, and if you can get an account with a credit union, the advantage is that credit unions will frequently give interest on the money you keep in your checking balance, but most banks don't. So typically you need to factor this in. So if possible, you can always bank with a credit union. Now once you start this banking relationship with the bank, they are going to give you two things. One is a checkbook, or in some cases a few checks, and most of the time you are not going to really need these checks, because nowadays most of the transactions can be settled by direct transfer. So if you have any bills coming to you, you can essentially give the bank details, give your account number, give some of the numbers which are mentioned in your check, and essentially what the bank can do is it can make a payment to that particular vendor, or the vendor can essentially debit that money from your bank account. Now the more important thing you are going to get from the bank or credit union is the ATM or debit card, and this is going to be the forum for payment to most of the places you go to. So if you are going to restaurants, if you are going to grocery, if you are going to fill gas, if you are going to some other places, essentially you will have to use your debit card here. Now the debit card will typically come with a Mastercard type of logo, so you can essentially use it in most places. Now you can start the process through this, and this is the minimum you need to get started on your financial journey. Now one of the problems is that this debit card doesn't help you too much in building your credit history. So you need to then think about how to build your credit history, and that's when we come to step number 2. So since you are completely new to the US, if people enter your social security number in their system, and let's say you have got this number by now, then essentially you are going to have no credit history. So you need to build this credit history. So one of the best ways to build this credit history is to start with a secured credit card. So essentially a secured credit card is something where you deposit some money with the credit card company, and they give you a credit limit which is equal to the amount of money which you have deposited with the company. So for example, I would say we can start off with the Capital One credit card. This has zero fee. It's linked with Mastercard, and it has a $200 minimum deposit. So essentially, if you deposit $200 with this credit card company, they're going to give you a credit limit of the same amount, and so you can use it just like a regular credit card, and at the end of the billing cycle you need to make the payments. Now once you make these payments for a period of time, maybe it's 6 months or 1 year, after that your credit history will start coming into being, your credit score will start going up, and you can request the bank to actually convert your secured credit card to a normal credit card. And if you have been paying all your bills well, they are likely to do so, and they will then refund your credit deposit back to you. So essentially that's the advantage of the secured credit card. Now keep in mind that if you do get a secured credit card, make sure that you make the payments regularly and diligently and meticulously, because if you miss any payment, that's going to have a negative impact on your credit history. So I would suggest that you link your secured credit card to your bank account directly, so that any amount which is owed on the credit card is directly debited from your bank account, and you do not have to remember this all the time, because in that case you can miss some payment, and that's not a good thing to do. Now once you have got this credit card, I would suggest you get one more credit card which is very useful, and that's the Discover secured card. Now here also they essentially start off with a very low minimum, so $200 is minimum here, and this is also a no fee card. Now the advantage of starting the Discover card is, now this is essentially set up with different people than the Mastercard, so your credit history is now going to build up on a different set of parameters with a different set of people. So essentially you can continue paying the bills properly and on time with the Discover card, and after some time with both these credit cards your FICO score is going to go up. Now initially it's going to be very low, it's going to be somewhere in the 550 range, and so if you haven't started your credit journey, but after some time you'll see it quickly rise up to 650 or something like that, and then after a year or two you may even reach 750, which is considered to be a very good credit score. So once these three steps are over, I would come to the fourth step, and that is essentially you need to save some money, or essentially have a forum where you can save some money. Now of course it's difficult for students to save much money, but let's say if you are somebody who has a job and you have some surplus money, you can start with this savings. And so here again there is a possibility that you go to your bank or credit union and you start what is known as a savings account, and you keep a few months of your expenses here. So this may be 3 months expenses or up to 6 months of expenses, and here the interest rates may be very low. The bank or credit union may have a minimum deposit requirement and so on. So here I actually prefer what is the Marcus Bank, and again this is a bank by the Goldman Sachs Group. This is an online savings bank, and they give you a much higher savings rate, and they do not have a minimum deposit. So I always like these scenarios. For example, the credit cards I mentioned, they have zero fees, so check that out. Go to their webpage and check it out if you are interested. You should always go for credit cards which have zero fees, and in case of savings also, why should there be a minimum requirement? So again check it out, and the interest rate you get is typically linked to whatever the Federal Reserve has set as the interest rate at the given time, but Marcus currently is giving a very good rate. So again keep some money here in case there is a sudden need for money. You need to take a flight back somewhere, you need to pay some important bills, you have some healthcare issue, you need to have some money at your disposal. So it's always good to keep some money in the savings account and also get some value for keeping this money, because you don't want to keep too much money in checking, because like I mentioned, most of the time checking accounts don't pay you at all, and in some cases when they pay, these rates are very small numbers. So it's always better to try to keep any extra money you have in the savings balance. So these 4 steps are going to get you started in the US finance journey. Let me recapitulate this. Number 1 is start a checking account. Number 2 is a savings account. Number 3 is credit card 1. Number 4 is credit card 2. So you can do it in this particular sequence, or you can do it with checking account first, the capital one, Mastercard second, the Discover card third, and the savings account fourth, because initially you may not have much money to save. So this was my take on how to start off the finance journey in the US, and once you have some money, you can then think about how to invest these monies. And if I get traction on this video, I will make some videos on simple ways to invest your money so that it grows along with you. Now, when you start out in US, of course, your credit history is 0, your credit score is very less or not even there, and in case you manage your finances well over time, your credit score is going to go up substantially. And why this is important? Because later in life, when you want to apply for a loan, whether it's a car loan or a home loan or any kind of loan, the credit history is going to play a huge role here. Your credit score is going to be very important, and you cannot suddenly increase this credit score. So if you spend 4 or 5 years in college, you have not done all these things, or you are in H1B and you are just keeping a checking account type of situations, you don't have any credit cards and so on, then what will happen is you will not have a good credit score later, and suddenly you will realize that you can't get the low interest rate for the car loan or the house loan. So credit history is a very important aspect of US. So I hope this video will help you in that direction, and I will see you in a video sometime soon. See you then.